Hello, everyone. It's early evening where I am in a very cold and partially snow-covered Cape Town, coming to you from the Winelands. Oh, not live yet. Okay. All right, and we are live. Hello, everyone. It's early evening where I am in the Western Cape, covered with snow, specifically here in the Winelands where we've got heaters going, we've got fireplaces lit, and we are super excited to bring you Simple Capital's first Africa bundle. Joining me tonight from somewhere in the middle of the United States, in fact, is our CEO, Tim Willis. Tim, welcome and nice to see you. It must be breakfast time or lunchtime where you are.
Thanks, Willem. Yeah, lunchtime here in Ohio.
Wonderful. All the way from Ohio. And ladies and gents, we are excited to bring you this Africa bundle. Tonight, as per usual, we will have 2 QR codes for you to utilize. The first one is a WhatsApp QR code. It'll come on screen in a second. There we go. It's the one on the top. Please use that to engage us. This is a digital forum. We want to make it two-way. And if you hover your smart device over that QR code, it'll take you to a WhatsApp group that feeds a screen that I've got dedicated here, on which we'll be able to forward questions and then pose those to the founders that we have of the 3 companies that we've got in the Africa bundle. If during the course of the evening or hereafter you find interest in this investment opportunity, please use the QR code below that. Hover your smart device over it, whether you are a new or an existing or a recurring Simple Capital investor. The investment process starts the exact same way for everyone, which is the use of this QR code that takes you to the expression of interest form. To kick off just with the terms and conditions that are applicable to all of our investment opportunities, Tim, can you just perhaps take us through the sophisticated investor requirements as they stand, please?
Thanks, Willem. So, as you know, all investments with Simple Capital are done through the United Kingdom, so it's in the UK. And to invest with us, you need to meet one of the following requirements. So it's an or, not an and. You either have to be a sophisticated investor or a high net worth individual as prescribed by the legislation in the UK. To meet the definition of a sophisticated investor, you need to be one of the following. You're a member of a network or syndicate of business angels, and you have been for at least the last 6 months prior to the date of investing. Or you have made one investment in an unlisted company in the last 2 years. Or you're working in the private equity, venture capital, finance space, so you understand the risk profile of these kinds of investments. Or you're a director of a company that in the last 2 years has had a turnover of at least £1 million. So if you meet one of those requirements, you would be considered a sophisticated investor. And the alternative to that is to be a high net worth individual. And you qualify to be a high net worth individual if during the previous financial year, immediately preceding the investment, your annual income exceeded £100,000, or during the year preceding the investment, your net assets exceeded the value of £250,000, excluding specific assets such as your primary residence. So if you meet any one of those definitions, you would be considered to meet the requirements of investing with Simple Capital. So most folks we find do meet one of these requirements.
Fantastic, Tim. Thanks very much. And as you said, that is a self-certification exercise that we take you through. If we go on to the next slide, and you're new to Simple Capital, you will hear the word bundle quite often. It's a product that we've innovated that's taken the market by storm and has a couple of key benefits different from investing bespokely or mutually exclusively into deals, in that you get vetted and curated deal flow. The ticket sizes have been shrunk for you to be able to participate from as little as $1,000 per share. And of course, you can trade this pref share because it is a pref share. And subsequent to that, one of the big things, of course, is that you get diversification because there are multiple assets inside of every pref share, which is why we call it a bundle. And Tim, tonight's bundle, if we just go to the next slide, is quite exciting in that it's, again, minimum investment of $1,000. And we've done an Africa bundle against the backdrop of some macros, right? So talk us through some of the house view around perhaps some of the pressure that people would have read about in the venture capital space, and also the view on Africa.
Yes, Willem. So this is a very exciting opportunity for us because, as you mentioned, there's this global backdrop that VC is doom and gloom. Now's not the time to be investing. A lot of folks are, following a wait and see approach, but we really believe there is a great opportunity in Africa. And I've got a graph here on the next slide, which actually shows that capital investment in the African ecosystem has actually increased over the last 6 months, according to Bloomberg, compared to in other markets where it's decreased. So we've seen that, and there are a number of reasons for that. Some of which are that a lot of the problems being solved in the African ecosystem are uniquely African in that, and they're very defensible. And so you're seeing people continue to invest in these concepts. It's the only region, to show this level of growth. I mean, over 100% growth. The funding has reached sort of $3.1 billion in the first half of 2022. And that's like a 2.5 times leap from the first half of 2021, and where we saw significant investments across these other markets. And as I said, we're really solving real problems in Africa, which has led to this to these statistics, where people continue to invest. And so following on this trend, we're excited to launch our Africa bundle. We've got 3 great companies that we're going to present tonight solving uniquely African problems. So maybe onto this slide, and we're gonna talk through each of these companies. But we've got Asark, we've got Zanifu, and we've got CarScan tonight, which are forming part of our Africa bundle. And then we've also got an opportunity to invest with our partner Untapped Global in some of the smart asset financing that they're doing in Africa. So really exciting call, lots of information for everybody to take hold of, and I'm excited to learn more.
Fantastic, Tim. Thanks so much. Interesting that the rest of the world is seeing valuation under pressure, evaporation of easy capital, and of course now with quantitative easing being in the distant past, the good entrepreneurs are the ones that are remaining, seeing as the easy money has dried up. And with valuations under pressure, one might even say, if ever there was an investment window that was suitable to long-term growth, this really is the perfect storm from an investor perspective, but also for the good entrepreneurs, as you say, of which we have 3 tonight, plus an additional opportunity through Untapped Global. So then, without further ado, ladies and gents, I will just re-invite you to keep this a two-way conversation. What we'll do is, if there are questions forthcoming that you can pose to us by virtue of scanning the QR code for the WhatsApp link, that'll pop up on my screen. And where appropriate, we'll feed them through to our entrepreneurs during their presentations. If not, we'll batch them to the end of the conversation where we have all 3 entrepreneurs and we can multi-direct questions that perhaps have relevance to more than one of the opportunities that we are talking about. But now, without further ado, let's get into Asark. And I am joined by Kavian First of all, welcome, sir. And where in the world do you find yourself on this fine evening? Delighted to have you with the Simple Capital team tonight.
Hey Willem, thanks so much. Today I'm in Western Uganda, among the volcanoes. I came out here to check on a new branch of ours that we just launched.
Fantastic. Will be the first from the side of a volcano conversation that we've had, a Simple Capital. So there's a first for everything. Tell us a little bit about our SARC. I know that you've got some slides prepared. We are very eager to hear about this component of the Africa bundle. Over to you.
Sure, thank you so much, Willem. Very nice to meet everyone. My name is Kaiban, the CEO and founder of ASAC, and we provide asset financing to African SMEs with a particular focus on the mobility sector. And behind me is a founding team that has been working together for the past 6 years, at times without any salary being paid at all, and through numerous ups and downs. But our backgrounds range from fintech to software engineering to microfinance, and we are the team that will carry ASAC to IPO. Our core product is motorcycle loans for taxi drivers, also called boda bodas here in East Africa. And in the last 3 years, we have put over 5,000 motorcycles on the road in Uganda with an outstanding loan portfolio of $9 million and a default rate of only 5%. We're currently earning annualized run rate of 3.6 million. We have been able to multiply revenue over 17 times in the past 12 months, and we're only just getting started. The huge problem that we're tackling is that out of 1.3 billion Africans, only 2% of them own vehicles, and yet the other 98% would really love to. When you compare this to the vehicle penetration rates in Western markets like the US, where perhaps 90% or more of people already own a car, it's clear that Africa is the last frontier market in the world and the most investable. So this is a $100 billion opportunity that's growing at 16% a year. And there are actually other asset financing companies in Africa, but they follow the brick and mortar approach, and they're plagued by a number of challenges. The first one being turnaround time. So at many other motorcycle lenders, it can take up to 6 weeks to get a response on somebody's loan application. The credit parameters are not always very transparent, and they tend to be prohibitively expensive options for most borrowers. And so we as a fintech have decided to focus on mobility because it's the second biggest employer in Africa after agriculture. And from a lending perspective, these businesses are quite secure because mobility businesses have daily cash flow. And the underlying assets are highly liquid. So defaulted motorcycles can quickly be resold to new drivers in the case of a default. To better understand our product, let's take a case study of our very first customer, John Bosco. So before John Bosco came to ASAC, he used to rent a bike from somebody. So he would borrow the motorcycle from its owner and pay huge amounts of rent just to be able to do his own business. Instead, after he came to ASAC, we were able to double his income by saving him from no longer having to pay rent. So John was able to acquire his first fully owned motorcycle for himself. He's now financing his second bike from us, and he's well on his way to building up a fleet of motorcycles. So in this way, he can rent out the other bikes that he's not using and earn multiple income streams and graduate to the middle class. And the motorcycle loan is only the beginning of our relationship with the customer. And it's only half of the revenue that we can earn per client. So after we disperse the motorcycle, we start building a credit profile on the driver by observing his weekly loan repayments. And we're also able to collect some unique and credit-worthy data points from the GPS trackers that we put in the motorcycles. So we can see things like how quickly does he brake, how sharply does he turn, and based on the driver's safety score and his loan repayments, we can then qualify him for other products like fuel and smartphone and personal loans, with other products in the pipeline for the future. And to manage all of these different products, we built our own core banking system from scratch. When we entered the Ugandan market in 2016, there were hardly any APIs available back then. So we had to build a lot of the tech ourselves to be able to run our business. So we have been able to partner with the three biggest ride-hailing apps in Uganda, and we're able to plug into their databases, crunch data points about their drivers, and then automatically approve them for loans. So we look at things like how many trips has the driver done in the past month, what are his passenger ratings out of 5 stars, and we have found that these financial and behavioral data points correlate pretty closely with loan performance. And so we already work with Bolt, Jumia, and SafeBoda, the 3 biggest ride-hailing apps in Uganda. And we also have an exclusive partnership with Standard Bank Group, the largest bank in Africa, to provide us with local currency debt for any African market where we operate. And through our partnership with them, we're also able to offer additional products like savings and investment and insurance to our clients, which none of our competitors can offer. The partnership helps us in that we don't necessarily need to get a depository or banking license ourselves, but we can still benefit from those revenue streams and solve more of our customers' financial challenges. And taking a look at the competition, we aren't the first motorcycle lender to enter the space, but we are the first fintech startup to do so, which has given us a number of advantages. So first, while the industry average turnaround time for our product is 30 days, we brought this down to just 24 hours. We also have a default rate that's between 2 and 5 times lower than the industry average, and we have done all of this with only by having 1/8 of the headcount of our competitors, because we have been able to use tech to automate many parts of the lending process that our competitors don't. And to summarize, we have built a $9 million loan portfolio with just a 5% default rate. Because of this, we've been able to access $25 million of debt facilities from notable funds such as Untapped Global, Standard Bank Group, and Chorus Finance. And we're building a blueprint for future verticals. All of the tech that we built around motorcycles can carry over to larger assets like cars and minibuses and trucks, and allow us to attack more of the market. And so we have already raised $30 million of financing to date from some of the funds that you see listed below. We are preparing to start raising our Series A, which would help us to fund geographic expansion. We're preparing to launch in Kenya in October. This would fund new product development with our exclusive partner, Standard Bank Group. And the new equity raise would also help us to support the sizable debt facilities that we're taking on to grow the loan portfolio. So thank you very much, and happy to take any questions the audience might have. I can't hear you, Willem.
It's only been 3 years. I'll learn when to put the mute button off soon. Ivan, I was just saying, what an absolutely exciting opportunity we're looking at here. I just love it when a fintech takes an incumbent solution and 30x improves the time frame on which the market provides the solution. It's fantastic. Super exciting. One of the questions that did pop through is around regulation and whether or not your nimble technology company should now register as a credit provider, or are you using that Standard Bank facility as the lending license? How are you getting around that?
Sure. So we are registered as a microfinance company, and we have a license to be able to issue loans and take collateral and sell collateral in case of a default. And the lending license is pretty straightforward to get in most parts of the continent. So our next target market is Kenya. There's quite a number of digital lenders there already. The licenses that are hard to get are the ones for commercial banking and to be able to take deposits from customers. So those ones bring on quite a lot of regulation that we're not ready for yet, which is why we went after this exclusive partnership with Standard Bank Group. So they allow us to actually to white label their savings app and present it to our customers as if they're getting a savings account from a SAC. But on the back end, the money sits with Stanbic, and they pay us commissions for generating deposits for them, because we're giving them access to the 95% of Africans who are unbanked.
That then begs the second question which came up, which is, why are the banks not doing this themselves?
Yeah, a very good question. So when you're a big commercial bank like Standard Bank Group or any of the other big ones in Africa, There are so many regulations put on you as a depository institution that at a certain point it's not possible to give loans within 24 hours, especially with the ticket size of $1,600 like ours. There are just many checks that they are required to go through by regulation. And I mean, the other reality is that many of the African banks that have become big have made a living by serving only the 5% wealthiest slice of the population. So, as long as they're still profitable and growing, there isn't that much pressure to innovate. However, some of them are waking up to the opportunity and realizing that the 95% who are unbanked can't be ignored forever. They are coming online, they are using mobile money, and they need credit. I just think that startups are in a better position to be able to serve the needs of that population because of the tech angle and because we have a lighter regulatory load.
Okay, very succinctly. Put two more questions for you that popped up. And just by the way, while you're talking, I'm getting a whole series of feeds here. There are lots of comments around new model for credit scoring, excellent use of data. So I think there's a lot of complementary feelings towards what you've been able to achieve here. Well done again. The last two questions is, what is your distribution route or your route to market? And what do you want to do with the money that you're raising out of this raise?
Sure. So the way that we acquire leads is primarily through our partners. So we work with ride-hailing apps like Bolt, Jumia, SafeBoda. So we give them certain parameters like, hey, Jumia, this month we would love to work with your drivers who have done at least 300 trips in the past month and who have 4 out of 5 stars or higher. So then they refer to us the customers they have who fit our credit box, and then we're at liberty to choose which ones to give motorcycles to. We also partner with more traditional organizations which are offline. So these are BODA associations and BODA savings groups, which number in the tens of thousands in Uganda and other parts of Africa. So for the money that we're raising in this round, this would help us. We already have 9 offices in Uganda. This would help us to reach to about 16 or 18 so that we get full geographic coverage of Uganda. It would help us to scale up in Kenya, where we're planning to launch in October, and it would fund new product development. So some of the things we have in the pipeline are to develop a safe motorcycle insurance product where from the data in the GPS tracker, we can see how safely is somebody handling the bike, and we can give them a discounted premiums as a reward for that. So we're able to do things like this with our Standard Bank partnership. And then the third reason for the equity raise is to support the debt facilities that we're taking on to ensure that we don't get over leveraged.
Yeah. All right, makes sense. Listen, one of the best pitches that I've seen, a super exciting business. You seem to have a really tight grip on it. Lots of market growth, and good luck with your geographical expansion. We're going to ask you to go to the backstage, and I will have some questions for you forthcoming from the group at the end of the evening again. Very nice chatting with you. Ladies and gentlemen, Kai Van with the first entrant into our first ever Simple Capital Africa bundle. I'm going to switch gears now and ask that I bring Steve to the foreground, Steve Pico from Zanifu. Ladies and gents, again, just to invite you that if you do have questions, comments, observations, please post them on the WhatsApp group. They'll make it onto a screen over here. And I also know that through our platform, you can put this in the comments section. It will make its way to me as well. And then where relevant, we'll pitch these questions or comments at Steve. Steve, welcome. Your first Simple Capital endeavor. First of all, where in the world are you today?
Thanks for that. I'm in Nairobi, Kenya. It's drizzling a bit tonight, but happy to be here.
Fantastic. I hope you've got a glass of good red wine ready for after this webinar. Steve, everyone is excited to hear about your business, and I do know that you've also got some slides prepared. Let's give the microphone to you. Take us through your exciting business as part of the Africa bundle, first ever by Simple Capital.
Absolutely. But actually, I don't have any slides. I was just going to talk through it.
Wonderful.
So my name is Steve Biko. I'm based in Nairobi, Kenya, born and raised. I'm the co-founder of Zanifu. We're a fintech that enable micro SMEs in sub-Saharan Africa buy inventory on credit. The problem we're solving is access to finance. So as Kevian and Asak mentioned, traditional banks don't offer credit to small mom and pop retailers simply because they require collateral, they move too slow, and the ticket sizes are too small to make sense of them because they're not tech enabled to the point that fintechs are. So we came in to solve this problem in Kenya, and what we did is we looked at the market and we decided to solve this problem for the consumer goods value chain. So the size of the consumer goods value chain in sub-Saharan Africa is about $900 billion, and there's over 40 million SMEs, mom and pop retail shops that operate in this space. And according to the World Bank, the size of the access to finance gap is $300 billion. So we chose this particular vertical to solve this problem, and we've built a platform that allows these SMEs to get a credit line and use it to buy inventory from their distributors. So our platform sits in between the retailers. These are mom and pop shops with brick and mortar locations that buy and sell fast moving consumer goods. And it allows them to pay their distributors. So these are SMEs that own warehouses, have a couple of trucks, and distribute consumer goods. So what we do is we take existing data from the existing commercial relationship, and we use this to score the retailer and give them a credit line. The product is offered in the form of either 2 week or 4 week loans. And when they borrow from us, we pay the distributor on their behalf, completely de-risking the use of funds. Um, we started this business in 2018, and since then we have disbursed. In the last 12 months, we've disbursed over $10 million. Since we started the business, we've disbursed close to $20 million. And in the last 12 months, we disbursed over $10 million, we generated about 780K in revenue, and we've been growing about 13% month on month. Last month, we disbursed $1.5 million over about 8,000 loans to 4,000 monthly active retailers. Our retailers, these mom and pop shops, use our credit to buy mostly consumer goods. So think cooking oil, sugar, flour, your basket of goods that go into your daily consumption basket. But we also do beverages, LPG, and things like fast moving hardware products. Um, so this is our model. And out of the people we disburse the money to, we get paid 97% of the time. The reason this happens is because our loans are strictly for financing consumer goods that generate revenue for these retailers. Um, we have a full-time team of 30 people. My co-founder and I met at an early stage startup in Kenya that was building the business module for M-Pesa. So in the process of rolling out this M-Pesa for business, known as Lipa na M-Pesa, we got to see the problem we're solving today. He has a background in product, and I have a background in sales and operations. To date, we've raised about $1.6 million. In this round, we're looking to raise about $5 million. And we're planning to use the money to generate $2 million in revenue this year, which will be a 4x growth from last year, where we did $500,000 in revenue. And we plan to hit profitability in Q1 of 2023. The next markets we also want to set up for are Uganda and Ghana. So we plan to join a SAC in that market. In terms of regulation, as he mentioned previously, in Kenya, to get a lending only license has just been instituted this year. We've applied for it, and it's pretty straightforward. Our model involves we borrow debt on our balance sheet, which we then on-lend to these retailers. We charge about 5% on the loans that we disburse. So yeah, this is Anifu, and I'm happy to answer any questions that anybody has.
Steve, thank you. Concise overview. First question that popped up was, what is your default rate? I recall you saying 97% of your loans are repaid. Does that mean
That's-
your default rate is 3%? Or to talk us a little
This
bit
is-
through average loans and default rates?
So the average ticket size is about $200. Our default rates are about 3%. 70% of what we expect to be paid is paid on time. about 21% is paid within 30 days of the due date, and another 5 or 6% is paid within 180 days of the due date. So for all the amounts we disburse, we get paid 97% of the time.
What's the average term of these loans, just for the finance people in our community to get a bit of a tackle on what the book looks like?
So they're short-term loans. So on average, you're looking at 2 weeks. So last month we disbursed $1.5 million, and the size of our book is about $1.2 million. Because of the short-term nature of the loans, the size of the book goes up and down pretty quickly and changes every day.
All right, and then I was trying to figure out what a graph would look like on your growth trajectory with which to understand if there's, direction in the right, is the vector in the right direction? And you mentioned, and I just want to double check if I heard this right, you mentioned dispersing $10 million in the last 12 months, 20 million since inception, but in your last month, 1.5 million.
This is correct. Yeah, so last month we disbursed $1.5 million. The total we're going to be planning to disburse for this year is going to be about $26 million. Through Q2 of this year, we've already done what we did the whole of last year, which is we disbursed about $6.7 million and generated $500,000 in revenue.
Fantastic. Steve, what's your route to market? How are you marketing the capability and the solution that you offer for your consumers?
So our route to market right now is very simple. We go to the distributors that already sell to these mom and pop retailers. So these are the people who already run the $900 billion market I'm talking about, right? This is how consumer get to market, through the informal channels. So we go to these offline distributors and we offer a value proposition of providing the customer with credit, and they introduce us directly, and we sign up these mom and pop retailers and we contract directly with the mom and pop retailers. So the SMEs are the ones who owe us money when we pay on their behalf.
And the user journey from being told about this capability all the way to actually issuing a loan, how long does that process take?
So as soon as you're onboarded, you install the app, you upload your KYC. Within a couple of hours, you get your credit line. If the truck is still there, you can borrow the loan right away. But our loans are tied to restocking events. So meaning the next time the truck of the distributor stops by, in that very moment where you would normally pay cash, you go into the application and you draw down on the credit. So our loans are really tied to the restocking events of buying inventory.
Fantastic. We think that there might actually be an opportunity for you inside of the South African space to partner with one of our other investments, which might offer you a similar route. So we'll be in contact around the expansion to the South African geography. But Steve, amazing business, super, super exciting. Well done with what you've achieved thus far, and all of the very best with your raise. If more questions are forthcoming at the end of the evening, then I'll be certain to call you back. And in the meantime, whilst you go off to backstage, I'm going to ask that I'm joined by Obens from CarScan. Yet another exciting opportunity. Obens, hello, nice to see you again. I think the last time we saw each other was in Rosebank, and I think you ordered the ribeye. So nice to see you again. Welcome to Simple Capital. Welcome to the first ever Africa bundle. Where in the world are you tonight?
I'm still working from Rosebank, so just few floors above your office, actually, in the same building.
Fantastic. Obens, welcome. Tell us a little bit about CarScan. I do understand that you've got some visual aids prepared for this evening's conversation. Let me give the space to you to tell us about this exciting part of the Africa bundle.
Okay, cool. Let me share my screen.
Sure.
So I'm sharing my screen. Is it visible?
I've got a little, there we go. I can see your screen, and floor's yours.
Okay, cool. Thank you. Thanks. Okay, so CarScan is an AI and augmented reality application which creates the digital twin for every car on the road. We have won several awards in the global ecosystem in logistics and transport ecosystem. So the problem that we solve for automotive ecosystem is capturing the most accurate data and vehicle condition about the car. How we do it? We utilize AI and augmented reality tool on mobile devices, static cameras like CCTV, or any of the remote camera devices which runs edge computing to detect very detailed damage, dents, scratches, tire condition, windscreen condition, and all of that in real time. Along with that, we can create the valuation of the car, the estimation of the car, like what are those damage estimations, what are those part numbers, pricing, and where can you show all of that. So end-to-end, literally vehicle data, capturing, management, and estimation. Everything happens in real time. What happens on back of that, we also ensure that there are no frauds happening during this inspection process, because inspection is such a basic need for the every touch point in the automotive ecosystem. Whether you are buying the car, selling the car, renting the car, you're doing the insurance, moving the car, distributing, whatever you do, even when you're scrapping the car, you have to know the condition of the car. Once the condition of the car is captured, we create this immutable record of every digital car condition on the NFT, which makes cradle to grave record for every car on the road. So with 1.4 billion car globally, today the manual inspections or other digital inspections, which doesn't embed any kind of AI capability, it costs around $435 billion globally with its AI and AI-based services. With our focus in South Africa and the other emerging markets where we are operating in currently, our target market is $1.9 billion. We have got almost all the top insurance companies in South Africa working with us for the inspections to be done at the time of onboarding the customers and at the time of first notice of loss. Some of these insurance companies are also global player like Allianz, Teleshore, and Sanlam. From insurance companies, we penetrated our market in repair fitment centers, and there also we have worked with some of the global players like the glass companies, the tire and wheel companies, the paint companies, and we have got significant penetration in this market. The third segment that we have got the penetration is into specifically into fleet rental and fintech space, working with some of the global companies like TransUnion, Macrocom, and Viva Motors, few other groups. So what the holistic picture of CarScan looks like. So from cradle to grave, starting from manufacturing to every touch point, we do the inspection, calculate the immediate valuation, estimation, and give this cradle to grave record with a lot of upcoming value proposition based on the data insights that we generate from it. For example, how many tires would be needed for on the road in possibly in Johannesburg in next 3 months or 6 months. So those are the kind of very unique insights that we are generating. And at this point, we are still exploring as we're evolving on our business model. So we have built a team of experts who have exited from their startups previously and built their startups in automotive sector, in the tech, and we have these global experts helping us to build this capability for the CarScan. We're raising a bridge round for $2 million, which we will be using for some of the market expansion will where we are, and then the product development and some of the operational expenses that we have. We have some of the investors like RMB, Alan Gray, Callan Ventures, Launch Africa, and IDF Capital. We will be profitable towards the end of this year, and we have at the moment we are doing already 50,000 scans a month, which we have grown from 5,000 scans this year in the beginning of this year. So we have grown our revenue from $5,000 as monthly recurring from January to $50,000 by the end of the last quarter. So we are growing significantly fast. So I'll take a pause, and I'll be happy to go into more detail as you have more questions for me.
I've got three for you. Just first of all, amazing traction in an industry, specifically on the insurance application, that has been, I think, hungry for some form of AI and automation capabilities, specifically in the claims segment of that niche. So, Urban's super well done. Some easy questions to kick off with, and then perhaps let's just roll with it as we go. You mentioned looking at the vehicle through a series of cameras, whether that's CCTV and or others, which will obviously give you good ideas around the exterior of the car. But who uses the scanning capability for stuff that goes wrong under the hood?
So a lot of times we require the exterior condition of the car, mostly for the rental space, the insurance space. We do have those capabilities to run the remote diagnostics through the OBD canvas devices, but that's not the significant portion of the inspections that we do. Our highest revenue generating is still AI and augmented reality inspection, especially during the onboarding and those quick touch points when you're taking your car for the service centers, for the workshops.
All right. Thank you. Your route to market. So how do you get more car scan capability into more users' hands? So
we are B2B SaaS business. So we have focused very much into specific accounts. So that's where we have targeted most of the insurance companies, some fleet companies, and OEMs. And with 20 accounts that we have, where we are generating this revenue, just with those 20 accounts, within next 9 to 12 months, we will be generating $300,000 as monthly recurring revenue. So our route to market is just sticking to a very focused strategic customers and working with them. And because we expand across the ecosystem, so we choose our customers very carefully. Insurance plays very important role in the automotive ecosystem. The other players are the OEMs, likes of Kia, Hyundai, who we work with, and then the fleet companies. So we choose them very carefully. We start with somewhere $3,000 MRR, and we have seen the growth from $3,000 to $8,000 with some early customers now. And we have the potential to grow each of these accounts to at least $30,000 MRR.
Absolutely fantastic. And just to the MRR point, did I hear you right when you said you're looking to become cash generative, or was that profitable by the end of the year?
Profitable end of this year.
What an amazing story. Obens, well done. Really an exciting business to keep our eye on. We're delighted that you are a part of this first Africa bundle. Thank you very much. We're going to be aggregating questions as we go along. And so when more come up, we'll be certain to bring you back to the front of the stage. For now, I'm going to let you go. And I'm going to bring Tim Willis, our Simple Capital CEO, back to join me all the way from Ohio. Tim, first Africa bundle ever. The backdrop of capital seeking out African opportunities and a way to diversify with a low ticket size into what promises, if we're hearing these founders right, to be an unbelievable growth journey. We're going to be tapping into the untapped global opportunity that sits next to this Africa bundle. And we've already heard Untapped involved in our second startup that we spoke of earlier. But perhaps I can ask you just to summarize for everyone. There's a lot of information here around bundle, a lot of excitement around the individual components. Let's take a step back, pump the brakes a little bit, and just look at what the bundle entails holistically.
Yeah, it's really exciting, Willem, and I think this just shows the quality and the talent that we can find on the African continent. So it's a great bundle of companies, super strong founders, and really strong businesses. So the three companies that make this up are Asark, Zanifu, and Carscan. They're all pre-Series A at the moment, and there's just 3 points here that we've got on each of them as to why we as Simple Capital really like these opportunities. So firstly, we look for big market sizes. Asark, over $100 billion. Zanifu, there's a $330 billion SME financing gap that they're filling in sub-Saharan Africa alone. And Carscan, global opportunity of $435 billion. In their target markets, $1.9 billion. These are all significant opportunities that they're going after. With Asark, with their North Star metrics being dollars of loans deployed, they've already deployed nearly $9 million in loans. They have a 32% interest rate and a significant, high collection rate. I think it was mentioned that it was, 95% plus.
Yes.
They're also doing $3.6 million in annual recurring revenue, and that has grown 17.5x in the last 12 months. So if you compare to 12 months ago, it's a 17.5x growth. So these numbers are really on an upward trajectory. If we look at Zanifu, they have disbursed $20 million in inventory loans since inception, with $3.5 million being disbursed in the last quarter. They have a 97% plus repayment rate, so a very, very low default rate at 3%. They're doing $100,000 monthly recurring revenue, and that's growing 25% month on month. And then finally, Carscan, as Obens just said, they're doing 50,000 inspection scans per month at the moment, but that's growing 20% month on month. So in a few months, that's going to be in the hundreds of thousands, and a few months after that into the millions. They're currently at $35,000 in monthly recurring revenue, but that's growing over 350% quarter on quarter. So I think we found three businesses that have really found product market fit. This is not their first rodeo, so to speak. They know what they're doing. They've got great revenue numbers, and they're showing really impressive growth. And all still at a fairly early stage, so well valued. Which goes to the next slide, which we'll talk through.
Tim, just perhaps the closing 2 cents from my side on that particular segment is that the team must be commended. Well done in finding these businesses that are post-recurring revenue, showing strong traction, large markets that they're addressing with solutions that are now being bought up at a velocity, which are all pointing to that upward trajectory that you found. So a very nice, perfect storm and a very nice time of the market within which to do that. Hats off.
Yeah, 100%, Willem. And so if we look at the deal terms, again, pre-Series A companies, we're looking at an equal split across the three businesses. Asark is raising $10 million on a safe note. They've got an indicative valuation cap of $50 million. So that means we will invest at whatever the priced equity round takes place at, but not at a valuation higher than $50 million. Zanifu is currently raising $3 million. They're also on a safe note, and they have a valuation cap of $10 million. So again, we'll invest at whatever the priced equity round is, but not more than $10 million. And finally, Carscan is raising $2 million, also on a safe note, and we will invest at a 20% discount to the priced equity round. So all raising large rounds, which we're participating in alongside a host of other investors, some of which are real notable folk that we obviously like to partner with.
Tim, and then from a structuring perspective, someone that buys into a bundle gets all three of these companies to the proportions that you've mentioned, and that happens through the Simple Capital structure. Perhaps just unveil it for those folks that are new or those that need a quick refresher of how the Simple Capital bundle structure works.
Great. So if you're today an Africa bundle investor, so you're in the pink box, you will be acquiring a Type T preference share in the gray company, which is Simple Capital Limited, which is an investment holding company. It only holds investments and issues preference share classes. All operational work at Simple Capital takes place at the OpsCo level, which is the investment partner. So Simple Capital Partners Limited is a separate juristic entity. And your T-Pref share in Simple Capital Limited will give you exposure to the three companies, ASARC, Zanifu, and Carscan. Just to remind you, you can invest from $1,000. There's a 5% upfront fee and 0 annual fees. There is also a performance fee on your investment at the end after capital and fees have been paid back to you. And finally, you have various options in terms of actually making investments. You can make a bank transfer at no charge, or you can make a credit card transfer, which costs an extra 3% on your total payment.
All right, brilliant. And then, Tim, these pref shares, part of what make them so super attractive over and above the diversification that a bundle offers, both in terms of jurisdiction, in stage of company, and in vertical of which those underlying companies operate, is, of course, the ability to trade that pref share.
100%. That's one of the big benefits is that not only can you get in at a low amount and you're diversified, but if you want to, throughout the life, if there's a willing buyer, you can be a willing seller and you can trade. And that's facilitated on our portal, which all our investors have access to.
Superb. All right, Tim, thanks very much for that. And perhaps now let's bring Caitlin Craig to the foreground of this conversation. She is from Untapped Global, an exciting new partnership for Simple Capital, I think stemming from the Noah House introductions that we had. Caitlin, very nice to see you again.
Nice to
My
see
first
you.
question to everyone, given this virtual world that we live in, is where in the world are you?
I'm actually in Canada at the moment, visiting home. So we do have a definitely spread out speaking panel right now all over the place. As everyone is coming in, I was thinking, wow, it's very international.
Yeah, very Earth, right?
Yeah, very Earth. I'm normally based in Cape Town, but just visiting family in Canada at the moment.
All right, well, fantastic.
Yeah.
Welcome to this evening and the first ever Africa Bundle. You're here tonight to talk to us a little bit about Untapped Global and specifically smart asset financing.
That's it. Yeah, excited. Thank you for having us.
Take it away.
Perfect. Okay, well, welcome everyone. And thank you again to Simple Capital for having us. Some of my teammates are on the line, Lundy's in the background as well, who's helping with this partnership. But just to give a bit of an introduction to myself, my name is Caitlin Craig, and I'm the investment officer based in Southern Africa, but I focus on Southern and North Africa with a bit of West Africa in there as well. So a bit of an introduction to who we are and what Untapped is. So we are a global investment company. We specifically focus on emerging markets and really specifically at the moment, we're very heavy in Africa. So predominantly most of our team sits between Cape Town and Nairobi. A few of us dispersing the capital and a few working on the tech side that we'll talk about a bit later. But as far as investments go, we invest in early stage and growth stage businesses. We invest in venture funds and have some equity investments. But what I'm really specifically here to talk to you about is our asset financing. And as mentioned earlier, we call it smart asset financing. So what is smart asset financing? It's a financing tool that we use to de-risk investing in emerging markets. It is a revenue-based financing. What we do is we work with companies like ASARC, who you saw earlier. Very excited that they're in the Africa Bundle, one of our favorite operating partners, which is what we call them instead of our portfolio companies. But what we do is we work with companies like ASARC who are very asset heavy. So with their motorbikes, who are looking to scale their fleets, scale their assets, but they often don't want to use equity to scale up. They want to use equity to work on their operations internally, and debt isn't always the best option. So they come to us and they come to us when we work on our smart asset financing. So what we'll do is we finance their assets up front. So SOC might come to us and say, we need to expand our fleet by 1,000 or 2,000 more motorbikes. And we would come in, give them the money for them to do that financing up front, get the bikes, put them on the market, put them in the hands of the drivers. And then every single time a driver makes the payment for their bikes, we share in that revenue that the bike produces. So we call them productive assets, the bikes themselves. The reason why we call it smart is we do an integration with these companies. So we will work with the SOC to integrate into their backend so we can track the revenue that's being produced by these assets, the movement of them often, really the productivity of the asset and how healthy it is. And that allows us to, one, see how much revenue that the asset's producing so we can invoice monthly for it, but also really understand the health of the business and how well it's doing as a partner for us. So this means that we really use data to make educated investment decisions. One thing that's great for the companies that we work with is that, like I said earlier, equity, especially for asset-heavy businesses, isn't always the best because they then have to raise a ton of equity in order to finance the scalability of their business. So we don't want to have them often dilute their equity, but use that more towards the operation side. And then with debt, they don't owe a set amount every single month. When they work with Untapped Global, the amount they owe us is tied to their revenue. So if they don't have a great month, we share in that risk of not having a great month. But if they have an awesome month, we also get to share in the upside. So there's benefits for both entrepreneurs of working with us, but also on our side where we get to share on the upsides as well. So it's great there. How do we make sure that we're staying low risk is that we diversify across countries and across asset groups. So motorbikes, we spoke about a lot with the SOC, and we have Flex Club, which is based in South Africa, that's doing cars and motor, and as well, actually they're in South Africa and Mexico. So e-motorbikes in Mexico, cars in South Africa. We have water filtration devices where we earn revenue based on every liter it produces. A big one for us is point of sale devices. So the card transaction devices. And that's a great one for us as well because we share in transaction fees. So every time someone swipes a card, a payment goes through. Usually the companies we work with take a transaction fee of anywhere between 2 to 3.5%, depending on who it is. And we'll take a percentage of that transaction fee as our payback over a set period of time. So the diversity side comes through country and through industry and asset as well. What does this look like as an investment process? So we really want to have data at the core of what we do and how we make decisions. So that means our due diligence really sits with our data. So we look at it through a 3-staged approach. We have the initial connection where we'll be introduced to a company. Either that happens, we reach out to them, or they come to us, or it's a mutual connection. Simple.Capital might come in and say, you guys need to talk to this person. And they'll come in, we'll have a chat with them, see if their business model aligns with what we're doing, and if they have that tech element that enables our integration. And we'll then just dive into it. We'll do a bit more risk, not full dive in, but do some risk analysis there. But we'll do a small pilot ticket, anywhere between 50 to 60K, which allows us to put money in their hands, see what they do with it, how quickly can they deploy the assets they said they're going to deploy, how much money are we hitting our targets that they said we're going to hit on those assets, and we then do that integration. So we're able to track the assets that we financed with that pilot amount and see what happens over, say, 3 to 6 months. What happens with those assets? Do they deploy them? Are we earning what we say we're going to earn? And have they done the integration? And once they've done that integration, we then have another conversation with them about scaling our partnership. And that means that we come in with another ticket size where we can do even up to $2 million, which is something we recently signed with a payments company. And we really look for companies that we can do that scaled financing with, where we can really take them to the next level because they're growing drastically. A SOC is a great example. We've scaled with them and their fleets or the amount of assets that they're needing financing for is constantly growing, and we can have a really ongoing relationship with them. So kind of that 3-stage approach, again, is the initial due diligence, have the conversation, do the pilot where we check the health of the business through the data integration, and then use that data to make a decision on whether we want to scale. What does this mean for the investors who work for us? So just quickly, we do the financing where we finance those assets. We track the assets using our data integration. And then every single month we collect, so we invoice for the revenue that is owed to us using the data that we have integrated. And that data is incredibly transparent. It's live, it's attached right to the devices. So we know exactly what's happening. And then after that, we pay back our investors. So where does the money come from? It comes from investors who are doing fixed income notes. And we pay back on a quarterly basis to our investors on what the amount that they've invested in and based off the turn time, which is varying depending on how much and how long they invest with us. Over the last, we've been doing this for about 18 months now, and we have a huge demand of capital from Africa specifically, but our biggest markets at the moment are Kenya, South Africa, Uganda, and Nigeria. It's where we're seeing a ton of demand and growth. But over in June, we were looking at, we had financed just under 7,000 assets. We have an IRR of 27%. I think last month it actually went up to 30%. So Dan, who's in the background, our fund manager, is going to kill me for not updating this to 30%. But our default rate is under 1% at the moment. And we have an ARR of 3.1 million. So we're really growing. It's been awesome to see how a different model of financing can really take effect and be super effective in a place that traditionally didn't have access to capital, and it's a different access to capital stream. So we're super excited about it. Really excited about simple.Capital partnership because word on the streets is that there's going to be a smart asset financing bundle coming out in the next few months. So definitely something to look forward to there. But if anyone has any questions, they can reach out to me, Caitlin at Untapped Global. Happy to answer any questions if there's any investors that are interested in Untapped. But definitely there's going to be hopefully a smart asset financing bundle that comes out of this.
Caitlin, I loved this the first time I saw it, and my sentiment is only stronger after your concise expose of what this means. 2 questions. You pay the interest back to insurers on a quarterly basis. Can they roll it? In other words, don't give me the dividend, put it back into the capital pool, and let's let this machine roll. Yes,
that's definitely something that we do with our current investors. So most of our investors at the moment are high net worth individuals, similar qualifications that you have. And they sit between the US, UK, Europe, kind of spread across. But most of them do exactly that, where they just say, let's keep it in and keep it going and keep it growing.
All right. And then the second one was, what sort of interest rates as a blended rate does the investor earn on the back of providing capital?
So you can earn up to 10%. It really depends on how much money you put in and how long you keep it in with us. But it's varying options depending on the amount that you're looking for and the amount that you can put in.
Okay, great. Caitlin, absolutely superb. We are equally excited about the partnership. And as you say, keep your ears on the ground, ladies and gents, for that RBF and smart asset financing bundle that might make its way into markets soon. Caitlin, thanks so much for joining me.
Thank you so
Pleasure
much
seeing you again.
Yeah.
And enjoy Canada.
Thank you. I'm back on Friday, so we'll make a trip out to the winelands.
You better. Please let me know.
Will do. Sounds great. Thank you, everyone.
Thank you, Caitlin. I'll bring back Tim just as we get into the wrap up of this evening. Tim, because there was a question on our open forum that asked about what next steps are. And of course, I can help with that. It is scan the QR code and get involved in the investment journey. But I also think there's a question around how long is the window open for? We know that in the venture space, deals move fast, so you don't have forever. But in perhaps more granular terms, how long is the window for this Africa bundle?
Yeah, thanks, Willem. So I think the window is probably the next 2 to 3 weeks. We're aiming to have most of the capital in within the next couple of weeks. So for those folks looking to make a decision, we will be sending out some more materials after this meeting. For them to review, but if they can let us know, as soon as they've had a chance to review those materials and send in their form, the expression of interest form via the QR code, or it will also be in the email. And I think it's on the portal. If you are watching via the portal this evening, you can you can simply invest. And just to be clear, you've got two opportunities tonight. You can invest into the Africa bundle. And if you're interested in what the team at Untapped Global are doing, you can also let us know via this form, and we'll look to get in touch with you to put you in touch with the team at Untapped. So let us know which of these opportunities or both of these opportunities that you're excited about, and we'll take it from there.
That is the follow. Tim, I'm so happy you said or both, because I was going to say it's not a mutually exclusive set. Absolutely, you can do both or either. When people want these materials to perhaps look at a bit more in-depth analysis, does that come with the QR code, or do they have to ask for it separately? We have that question on our open forum as well.
So everyone who's RSVP'd positively to this meeting will receive the materials during the morning tomorrow. So an email will go out and you'll get the materials with a deep dive on each of the companies that we presented now. So between now and tomorrow morning, you will be receiving that email.
Thank you, Tim. And thank you again for the questions, ladies and gents. It's been super to engage with you this evening. I will just perhaps as a closing comment mention that, as you can see, these are startups that have been curated and vetted, which is one of the benefits of getting into the Simple Capital bundle space. They are hot. Capital is flowing into Africa to seek out these types of companies. They're not going to hang around forever. We have negotiated windows with them that remain open, as Tim had mentioned, but they're definitely getting capital to pursue these growth trajectories even further. So look at the materials, make your decision, scan that QR code, and get involved sooner rather than later. Tim, thank you very much for joining me this evening. Nice to see you. Please keep that side of the Pacific going. To the founders that joined us this evening, excellent presentations and wonderful businesses that you have. Thanks so much. And of course, to the Simple Capital community. Very nice to engage with you again this evening, and to the Simple Capital team that sits in the background that make this production possible. Stellar job. Stellar job. Thank you very much. Ladies and gents, we'll see you on the other side. And as always, yours in prosperity. Have a great evening and stay safe. Take care.